Hi, I'm Brian Neal, and welcome to the trading course on a terrific bottoming pattern. This is one of our favorite bottoming patterns, and it continues to work well. I'm Brian Neal, and I'm founder of Tradetobefree.com and InvestBeFree.com. We started Tradetobefree.com back in 2004. I've been swing trading now since 2002, so for the past almost 15 years, 14 years now. And we joined the Better Business Bureau back in 2006, and we have an A+ rating with them. And I just want to mention that before I get going here. But yeah, this is one of my all-time favorite trading patterns. It's a great pattern if you're swing trading. If you day trade and trade full-time, it's also a great pattern because you can look for good day trading patterns near the entry point on this pattern, and you can find a lot of these throughout the year. Throughout the month, actually, and they'll come up again and again. And we find that you can make 4% to 20% or more in profits in within a week or two, and it has a very high probability of success too, as well, along with a lot of upside potential. So if you ever wonder when to buy a great stock on a pullback, this is one of the best performing patterns to look for. There's double bottom patterns, which are very good. There's rounding bottom patterns, which are good if they're well developed, well formed, okay? But this pattern is very effective, and it's one of the best ones, and it has a higher rate of success, in my experience, and I've never really seen it taught properly, and I'm going to do that today. This is the first video in a 3-part series explains it in detail, and I will give you all the nuts and bolts, the theory behind it, exact entry points, exit points, how to find the stocks, everything you need to know to use the strategy and be successful at it, okay? And like I said, it has a very high rate of success, and we studied this over the past year and a half in 2015 and 2016. We chose a study period because it includes the recent bear market in small caps. Okay, so if you have a long strategy that works really well during a bear market, or including a period that is a bear market, then you have a very good technique if that long only strategy has a real high rate of success. Okay, so that's why we focused primarily over the past year and a half to cover the current market and also to cover a period where there was a bear market, a downtrending market in small caps, where the small cap Russell 2000 index pulled back more than 30%. Okay, so in this video course, I'm about to show you exactly how to play it with maximum effectiveness. This includes where to find the stocks on your own, the exact chart settings you need, and the precise entry-exit strategy to use. And here's some important things to keep in mind. This technique often beats other good day trading patterns and more often bucks the market trend. So on days when I'll have 2 or 3 day trading setups I'm looking at, and I have 1 or 2 of these, I find that this pattern often performs better. It has a higher likelihood of success, and you can take your time entering the trade, okay? And the stocks often move 3% or more within the first couple hours out of this pattern. Okay, and you do not need to quit your day job to start doing this. So you don't have to go out and trade, every day. During the day, you can keep your day job and work on this, develop your technique and your skill. And as the results come in over time, you can get to a point where you can quit your day job and do this full time. All right, and you can practice this on paper or a simulator until you get the hang of it. It's highly recommended. And although it has a high probability of success, some of these also make very large moves out of the bottoming pattern over the next few weeks. And this is because it's a very oversold stock with very strong technicals coming out of that oversold range. And the stocks that we use and look at for this pattern generally have improving fundamentals, okay, in terms of they're a top growth stock or they're beating estimates with rising future expectations. Okay, and then this swing trading pattern can be your go-to trade in most markets. Okay, it's currently my favorite bottoming pattern and one of my favorite trading setups that I look for. Okay, especially for a short-term swing trade, and it generally takes just a few days or less to reach its target. So even if it's an iffy market, if this pattern setup is good, this trade will often go well, even if the market isn't breaking through new highs and it's not continuing its uptrend or is just starting to turn over. Okay, and I recently discovered this pattern while reviewing trades over the past year and a half in my newsletter. And in the newsletter, we only have the top growth stocks and stocks that are beating estimates with rising future expectations. Okay, so this is a certain subset of the stock universe. Now I'm going to show you exactly how to find these stocks and build your watch list later in this and the other videos in the series. Okay. Again, I chose a period of 2015 to 2016 and early to mid 2016 and into the fall, or actually to the end of the summer of 2016. Yeah, I chose that period because it, again, it included the bear market and small caps, and this should be the worst performing period for most long strategies. So it's a good proving ground. And without the added criteria of the distance between the entry point and next key level of resistance, if you don't factor that into whether you take the trade or not, the success rate was about 60%. But again, that included the bear market and small caps. Okay, but adding this key criteria and then applying it to all stocks in the study featured in the newsletter, the success rate went up to about 75%. Okay. Now, a trade was successful if it moved at least 4% higher from the entry point before pulling back 3.5% below the entry point. And it's a great success rate for a long-only strategy during that period with a tight 3.5% stop loss. Okay, now it assumes that you use a mental stop instead of a hard stop, which is what I do in my trading in most cases. And I believe using a hard stop would affect the success rate somewhat, a little bit, but not a whole lot. And the technique should have a higher success rate during periods where the market is making higher highs and higher lows, trending higher in a strong bull market, and perhaps trading stocks above their 200-day moving average only. I can't verify that, but from my experience, I would say that would be your better bet. Now, it's important to realize that I checked the success rate of this pattern only after the stock appeared in the newsletter. Okay, so the stocks that we feature in the newsletter have had those bump in earnings estimates. They've had a recent earnings beat very often, and or they're the top growth stocks in the market. Okay, so you don't want to test the period leading up to that point where it comes in the newsletter, because you know at the point it came in the newsletter that those fundamental factors were improving over that time period in the past. Okay, so what we did was I just looked at from the time the stock was featured in the newsletter going forward, rather than using any hindsight as far as the fundamentals go for the stock. Okay, so that was a better way of doing the study and a better proving ground for it. Okay, so I did not use the benefit of hindsight in terms of rising estimates, beating estimates, and growth characteristics. And also, I did not remove the trades from the study if the earnings estimates started to trend lower or if they suddenly had slower growth. Okay, so it's possible success rates would benefit by not taking trades on stocks where estimates are starting to decline significantly, or if the company starts to miss estimates, or if the outlook starts to erode substantially. Okay, so I think I think if you exclude those stocks, the success rate would be higher. But I didn't in the studies, and the success rate was about 75%. Okay, and before you begin, you want to understand candlestick charting first. This is the best way of charting stocks, in my opinion. You can refer to the candlestick charting video in this video series. And it also helps to learn the basics of trend analysis and when a trend change occurs. All right, we have a video that covers trends on multiple time frames on our YouTube channel. And again, also start by trading the system on paper or simulator first for a few months to ensure you're seeing good results overall. And as with any trading strategy, expect some losing trades and be prepared to cut losses short and do so quickly. Okay, so use a great charting service like stockcharts.com, which you will learn quickly in this video, or next video, I should say, if you're not familiar with it. And it's easy to use once you know how. Now, I want to debunk a trading myth first, because I think a lot of people are confused by this. Now, most traders believe that fundamentals only matter if you buy and hold. And for the most part, that's true. I mean, technicals do trump fundamentals when you're trading, especially on the shorter time frames. Okay, no question about that. But when you're swing trading, it does come into play. Okay, and it can give you a little bit of an edge. And that's what we try to do on our site, Tradetobefree.com, and also InvestBeFree.com, and you can see the results there for yourself and see how we beat the market with our performance chart on InvestBeFree.com by using the fundamentals that matter. And those fundamentals are strong growth characteristics over a number of years, and also looking at companies beating estimates with rising future expectations. Okay. Now you can ignore fundamentals when you're scalping, more risky penny stocks for minutes or less while day trading news events. At that point, you just want to figure out whether the story coming out, the news item coming out, is significant or not. Okay, that's all you need to know, and that'll be enough to know whether you should take that trade or not. You just want a real catalyst if you're day trading, penny stocks. Now, if you're swing trading, though, those key fundamental characteristics can give you an added edge and can help you do very well on better stocks with less downside risk. And that's been our experience. Now, it even helps on day trading news events on higher price stocks as well. And I'll show you that in my day trading course at a later time. Okay, so here's the strategy. And I'm going to give you the strategy in a nutshell so you kind of understand it first, and then I'll dive into a lot more details in the next video. But the first thing you want to do is find stocks with either very strong and consistent growth in sales and earnings, or a stock with rising estimates with a strong track record of beating those estimates, or just a company that has had recent periods of doing so. Okay, so you want to make a list of stocks. Okay, it's ideal if it's a top growth stock that also has rising estimates, and I'll show you how to find the stocks you need for free. And later you can save valuable time by using the best screener that I will be sharing with you in the next videos. But, you can find this information on a lot of news sites. You can go on CNBC or Yahoo Finance, briefing.com. You can look at Zacks. You can look at their earnings calendar to find companies that are beating estimates, and then look at the news stories to see if they're beating both on the bottom line and top line. You want to see them beating both the top and bottom line, and also see on Yahoo Finance what the trend is in the earnings estimates over time. Okay, so that's a great way to find those companies that are beating estimates with rising future expectations.